Today, we're diving into a fascinating piece of financial history. Did you know that Warren Buffett's biggest investment mistake was selling McDonald's? That's right. You see, back in the 1960s, Buffett made a bold move to invest in McDonald's. However, in the 1990s, he decided to sell his shares. Little did he know that he was missing out on a massive opportunity. Warren Buffett is widely regarded as one of the most successful investors in history, with a track record of generating impressive returns over the long term. But even the Oracle of Omaha isn't immune to making mistakes. In fact, one of his most notable blunders was selling his stake in McDonald's, a move that has left many investors scratching their heads. Buffett's decision to sell McDonald's shares has been dubbed one of his biggest investment mistakes, and for good reason. At the time, McDonald's was a stalwart of the U.S. economy, with a brand that was synonymous with fast food. But Buffett, who had initially invested in the company due to its strong fundamentals and growth potential, decided to cash out and move on to greener pastures. The question is, what drove this decision? And what were the implications for Buffett's investment portfolio? By selling McDonald's, Buffett missed out on a significant chunk of potential returns. The company's stock has continued to rise over the years, fueled by its ability to adapt to changing consumer preferences and its strong brand recognition. Had Buffett held on to his shares, he would have benefited from this growth, but instead, he was left to wonder what could have been. This decision also highlights the importance of having a long-term perspective when it comes to investing. It's also worth noting that Buffett's decision to sell McDonald's was likely influenced by his value investing philosophy. As a value investor, Buffett looks for companies that are undervalued by the market, with the intention of holding onto them until their intrinsic value is realized. However, this approach can sometimes lead to impatient decisions, as investors may sell their shares too quickly, missing out on potential long-term growth. Fast forward to 2018, and McDonald's shares were trading at a staggering $188.28 per share. That's a whopping 10,000% increase from the original price of $18.82 per share. Imagine if Buffett had held on to those shares. He would have been sitting on a fortune worth over $100 billion. Warren Buffett's investment philosophy centered around the concept of long-term value, where investors focus on the underlying fundamentals of a company rather than short-term market fluctuations. This approach has served him well over the years, generating impressive returns and cementing his reputation as a shrewd investor. Warren Buffett's biggest investment mistake was selling McDonald's. It just goes to show that even the most successful investors can make mistakes. Don't forget to follow and subscribe for more financial insights and fun facts. Cheers!